live without you, myself, and Chris Beecham, who is next to me.
Good morning.
Very busy. We're gonna let you get on with your morning update.
Yeah, sorry.
It's a send off right now. Meanwhile, across Europe is looking like a very busy day. So grab your espressos because we have got a huge day in terms of earnings. It's Thursday and we have numbers from AstraZeneca, Rheinmetall, Diageo, and also Commerzbank, Telefonica, ArcelorMittal, and Skanska, amongst others. Also, tons of central bank decisions due not just from the UK, but also from Norway. Bank of England seen likely to keep its rates at 4%, but it's all about, of course, the 26th of November autumn budget. We've been talking about that a lot, and we'll have a special week of things planned for you as well. Of course, I've got producer Phil saying don't let the cat out of the bag just yet, but we will be letting all of you know who we've got coming in to talk about.
Is it the Chancellor?
She actually does live very close to where I live and does come for our Christmas carols.
Oh, really? Oh, well, she'll be popular this year. Will she be playing the role of King Herod at the Nativity play?
She does come, like, very covered, but we all know it's her. Let's have a look at what's coming up, shall we? Right, here we are. We've got overnight action with myself and Chris Beecham. Surprise, surprise. Opening bell as well with Beachy Head here. And, of course, we've got Guess the Chart. A bit of a surprise. I'm going to wave this at everyone. Is this the prize of the winner of Guess the Chart?
Well, it won't be me with Windsor because I never get to win because apparently my way of working it out is
I stand a better chance if it's a US tech company.
Yeah.
But any other company, kind of difficult. I was left this on my desk today here, so I don't know whose this is, but maybe this could be the Guess the Chart gift. Fast Markets with myself and Luke Moore there, 8:15. Make sure you clock that because Luke is going to come and give us a heads up as to what's moving with me. Then we have Man versus Machine. Aaron Bright and Martin Harris comes online to give us an update of who was up last week, Producer Phil. Was it Man or Machine? I was in the rainforest. The Machine by 0.2%. I'll be on with the US pre-market with the Angers Market Espresso without a machine, and charting crypto with Axel Rudolph. So any questions? Of course, it has been a wild ride for those of you that hold Bitcoin, Ethereum, Cardano, Solana, and all those. It's been a wild ride the last couple of weeks and days. Right, let's head over to overnight action. Hey, trader friends, welcome back. Before we get to overnight action, good morning to all of you. Peter Shastri, good morning. I have spoken again for a third day running. You can ask Chris to DevOps about the Wall Street because Peter, I believe, and some others talked.
Okay, good, because I've got the same problem. I will tell them again. Okay.
Yes, we are aware of the issue because we have been reminding them, both Chris and I, since Monday.
They thought they'd fixed it, apparently, but obviously they haven't fixed it, and so we are still poking them to get it done.
We are with
increasingly less gently, though.
Yes. Parky 1977, good morning. Julian, good morning to you as well. Hi, Derek. London Guy, love that mantle. Tell us where that mantle comes from. Carlo and Funky Gibbon, Boise. Good morning. I missed you whilst I was in the rainforest. And Maturin, good morning. On Discord, the importance of keeping your charts simple and uncluttered. Wood Group starts trading again today, trading Oracle, and would like some feedback on that. So we will give you that. Maturin also enjoying a growing number of people on Discord. I've handed Maturin a lot of our viewers and clients and people who come on the show as guests.
Is it growing?
It is growing.
That's
they want in. How many people now? Paul, give us an update if you can on the chat. Blake 7 there as well. Good morning. About 120. I'm being told.
That's good.
That's very good. Very
Sorry,
good
I'm
indeed.
done now. Sorry, the morning call is out in the ether. It's been
Fantastic.
sent. I'm sorry. Apologies, everybody.
Speaking of what's out in the ether, Rachel Reeves updating, shall we say, the markets and saying this time that she's set to spare UK banks from a tax rate.
Oh, well, that's nice because, everyone else has to pay more tax, but not the banks.
Not the banks.
Not the banks. That's fine. No, you don't want banks paying more tax.
But if you own your own business or you're part of the middle class,
Yeah, please pay more tax.
or please
There's a very good BBC Radio 4 three-parter on tax, and I say that as a very exciting person listening to this. Very interesting about the tax system and how it doesn't work, with a good appearance from Mervyn King talking about it. And loads of ex-chancellors saying, yeah, we were all too cowardly to do anything about the tax system. Sorry about that, which is quite entertaining itself, but yes.
banks pay around 28% corporation tax at the moment, higher than the standard 25%, as well as a separate balance sheet levy that is charged at up to 0.1% of a portion of the lender's balance sheet. So a lot of people have come out saying that, this, depending on which side of the fence you sit on, obviously Chris mentioning elsewhere, everyone's saying, oh, well, everyone else has to pay higher tax, why not the banks? But the city, of course, on the side of the bank, saying that they were worried that Reeves would use the budget to boost bank taxes to capture high profits in the sector. Of course, many outfits out there with the high volatility return, although early signs, Chris, shall we say, early signs of the IPO market returning?
It's looking better. You obviously had the Prince's IPO last week, which got... it didn't do very well. It priced at the bottom end of its range, and I won't do any fish puns because it's too early on a Thursday morning.
Yes.
But the FT was quite rude about it, saying it's... they called it a kabuki IPO, as if it's going to get more IPOs coming through, we need more than just the occasional tinned fish company coming through. So there are signs perhaps of life. And again, predictions of the death of the LSE are exaggerated, I suspect, but it certainly isn't quite the all singing, all dancing IPO scene that they'd like, and certainly not in the way that it is in the US.
I watched the news with great interest because I am a customer of Prince's Group, because when I go off in the summer and need to be by the seaside and stuff like that, you go to the closest, shop, and if you stock up on stuff to make sandwiches and stuff, and it tends to be, I'm serious.
But clearing the shop out of as much tuna as you possibly can.
Emma's a big fan of tuna sandwiches. But back to this, there's a trade reason for this. There's a trade. The valuation of Prince's, not sandwiches, was significantly lower than the $1.5 billion that the company had been expected to fetch.
I didn't net the required valuation. Oh, sorry, there we go.
Right. So we have that, as well as in a week when we got the Bank of England. Ta-da!
The excitement is almost palpable. I say almost. There's 28%, 30% chance of a rate cut. And the view is that because Reeves is going to fleece everybody for more tax, the requirement is that the Bank of England will have to loosen policy, because otherwise the spending situation just gets worse and worse and worse and makes life a lot more difficult. So I think this is the idea that even if they don't go today, they're going to have to go at some point. So it could be a very interesting one. So watch the vote today, see how many people vote for a rate cut. Obviously, inflation has weakened quite a bit, so that gives them some room to cut rates in due course.
I love how
but they're still not moving on this front yet.
I love how Chris dovetails beautifully to the chart that I'm about to show everyone and zoom in here. Yes,
it's like a ballet. It really
it is like a ballet. without prior meetings, although we do keep in touch on WhatsApp. UK inflation, take a look there. As Chris mentioned, it has weakened on all fronts. CPI services, core as well. Rates, just a reminder, have fallen some 5 times. Is that got that right? Since August.
Yes.
And we are at a point now where it's very much about the vote. We saw what happened the last few times, and I think it was the last time when, historically, first time ever that they had to do a revote.
What, the last time they met?
I think it was last.
Really?
Yes.
They had to vote again?
They had to vote again, or was it the time before that? They had to vote again because it wasn't...
European.
It was very
They didn't get the result they wanted, so they had to have another vote.
It was very close. So the question now is it going to have to change its tone very quickly? Because obviously the Fed as well expected to cut rates. We've got all these earnings.
What is the pricing for December on the Fed at the moment?
Let's have a look. Are you going to punch it up?
Yeah, let me just...
Whilst you are punching that up, we are looking at a flat-ish open as markets struggle for direction.
Yeah, 62% chance of a cut still in December. So even now, the Powell's attempt to sort of don't make... I think that it still was the view of, oh, don't assume that we will cut rates in December. Don't make it's not a foregone conclusion.
No.
I think is the key thing here.
My feeling is there's going to be a little too much going on with the autumn budget.
Too much.
So they're just going to maybe hold for now, you know, keep...
Oh, the Bank of England?
Yes.
Sorry. Yes.
Yeah.
Probably.
You know, save some powder and see what happens on the 26th.
They don't get an alert, do they, beforehand of what's going to happen?
No.
BER does.
Yes. I mean, not as if there's not been enough toe dipping in the water recently, which has been fantastic for...
Toe dipping or kite flying?
Kite flying.
Kite flying. Toe flying, kite dipping. No.
Yes, so other than that, loads and loads to cover today. We got AstraZeneca, got Rheinmetall, Diageo, Commerzbank as well, as I mentioned earlier. Still swirling in the markets. All this question about whether or not we are in a bubble and is it about to burst. I'm sure Chris...
I'm not triggered by... I'm triggered by many things, but bubble is the one at the moment. That and which will come to me at K-shaped economy.
How many times do you get asked a day?
Oh, it's at least once a day. At least once a day. And it's certainly the number of sort of inquiries from the press about, is it a bubble? What do you do if the market comes off? I think it's one sense it's justifiable because you've had a huge rebound in 6 months. Record highs. It seems like every day is record highs. Record highs for FTSE yesterday as well, even after the briefest dip. And it seems like it just doesn't want to stop.
Let's take a look at the chart there, which I put up for you. Doesn't seem... It falters a bit and then everyone gets worried, but then it comes back up again.
Yes, and this was it seemed like, oh, now it's finally going to have at least a week or two move to the downside, because we've not had that for a while. And in the way of things, as I probably say this every week, we're kind of overdue a sell-off. You can't timetable these things. They don't arrive on schedule. They just arrive when they want to. It's been a while since the last one, which means, in a sense, it's more likely that you get another one. So I understand the nervousness. But the funny thing was how quickly it rebounded yesterday, as if all the people who've been shut out in the last few weeks who haven't been buying because it was going up and up decided, oh, now I can buy it because
FOMO.
Yeah, exactly. South Korea drops sharply, the Nikkei comes off, and then suddenly you get an entry point, and it just, without even batting an eyelid, it just turned around. Whether it's down to this tariff court case, of course, which we'll come to, that if the Supreme Court strikes it down, it seems possible. Apparently, it seems to become, what was it they said? I forget the word they said they used earlier in the week, that they weren't...
Deep skepticism?
Deep skepticism, I think it was, about whether he could do it. The idea is that technically, obviously, Congress could strike it down, so it's almost the court saying, well, it wouldn't be up to us to stop it. There's still a mechanism to stop it if you wanted to. But it certainly looks like they may well rule against it. And I suppose that's perhaps the worry, because if he gets his favourite policy ruined, then he's going to get a bit angry and he's going to do something silly.
Yes, and markets won't like that. Rags saying gold above 4,000 again, talking about this bubble. I think we should have a poll, producer Phil. Do you think stock markets are in a bubble? Have we done this poll recently?
I think we do it every day.
Right. Jobs Jobs as well. One to keep an eye on. Private sector job creation, I noticed, swung back into positive territory in October.
Still weak, but didn't decline. So of course, this is the fact we've only got the ADP reading to go on, because tomorrow once again is non-farm payrolls day.
Non-farm.
I think it's great. I think because every month
You don't like the NFP number, do you?
It doesn't annoy me like PCE does, but I think it's outside of extreme periods of crisis, it doesn't really matter. And it's invested with an importance that, as I say, outside, say, 2008, 2009, it doesn't deserve, I think. And that's understandably heresy. But some people watching may remember the sort of 2000s and the 1990s when nobody cared about the non-farm payrolls report at all. So it's not as if it has to remain a pivotal part of the calendar, but it still retains this, I think, since 2008. But if you look at gold, you can see on the chart there, this was actual trade of the week, of course, and while it hasn't rocketed away, it certainly is holding nicely in that kind of pullback pattern, if you like. This is an illustration of what I say that markets have to go. They go down, they go sideways, or they go up. And at the moment, I think we've moved from the going down part of the pullback to the going sideways part, and it's just beginning to carve out this base above 3,900. It seems like it doesn't want to go below that, also below the 50-day moving average, that blue line there. So it looks like, as people have noted on the chat, back above 4,000, there seems to be a desire for it to head higher. On current evidence.
And this is why technicians always talk about, bear in mind, draw it in if you need to, where the area of buyer interest is. And if you look back at Chris's gold chart after this poll, you also see perhaps the start of a formation of a double top at that level, perhaps. But we talk about this a lot here, about having an overarching view as well about when central banks cut rates. If they cut rates and the economy is tanking on its knees, then you've got reason to worry. But at the moment, we're looking at mood music of rate cuts when US economy is still looking relatively resilient, right? And this to me is why I, in my humble opinion, am not running for the exit yet. Please put in your, hit the button to put in your thoughts on the poll. Where will markets finish at the end of November compared to now? It's going to be bearish, lower. Are you on Rich's camp, or momentum is key, bullish? It will be a choppy consolidation. And then, Phil, is that you? You know what they say.
Is there a consolidation that isn't choppy? Is that a tautology? I think that's a tautology, but I'll give it to you. A choppy consolidation. I've never seen a calm consolidation, put it this way.
Speaking of which, who will be watching with an eagle eye will be Elliot from the volatility desk. You know about his ongoing, ongoing bet. His
ongoing bet with the McDonald's, yes. Yeah, so and still coming back in,
6,000 first before 7,000, or is it going to be 7,000 before 6,000? He's already put together, thanks to our trader friends, a number of restaurant recommendations. Ooh, I hope you're watching, Rich. Let's take a look at oil and natural gas as well.
Oil.
Yeah. Close to that 60 mark there now. BP, of course, beating when it came off.
This was my trade of the week from 2 weeks ago, and still holding up. And seems to be heading backwards. So what we're seeing here is around 59.66, 59 sort of 60, if you like. This is where the buyers came in just to hold it last week, and we're back there again. But it's kind of a lookout below moment, because if that goes, you almost sense that the trapdoor back down towards, say, 56 is about to swing open. And to sell the rally has been the way to go here in oil since this huge spike, which is around the Middle East, the Israel-Iran conflict event, or whatever you want to call it. The way that you had firm move to the downside there, and then one of Phil's favourite choppy consolidations here, and then obviously it went back down again, and you've had another choppy consolidation, and then off we go back down towards 56. Seems to be that way. Notably, momentum continues to weaken as well. So the downtrend there is still firmly in place, and that's a major problem, of course, the likes of BP and Shell and stuff, because it makes life a lot more difficult in terms of their earnings.
Speaking of which, have you seen the double comments from Jensen Huang? So,
Oh, we're not in a bubble. Well, to quote, what's her name from the Profumo affair? Christine Keeler from the 60s. He would say that, wouldn't he? So,
yes.
But he's not. I don't think he's wrong.
So Jensen Huang has said that previously, but right now he's quoted twice.
Oh.
Once in the FT and once in the Times. I'll tell you the Times after this. It says China will win the AI race with the US. No surprises there, given that's why he's trying very hard to sell as many chips as possible.
He's
to get
clearly pushing something. This is more of a comment aimed at Washington than it is aimed at
China.
China, yeah, indeed, markets generally. It's a kind of lettuce.
Wake up, Washington. We need
Yeah.
to feed them as many chips as possible, as cheaply as possible, so they get hooked on them, so they don't develop their own.
Well, yes, and also the idea that lower energy costs and looser regulations, if that's what they need, then clearly they are arguing that the West, and you can argue this certainly in the case of the UK, power is far too expensive, and Trump understood this. This is a cornerstone of Trump's re-election campaign, that people don't want to pay too much for their energy and for their fuel, and if you could bring that down, it does a lot to boost the economy.
Interestingly enough, and you've hit the nail on the head, trader friends, tell me what you think about this. Jensen said that the new rules on AI by US states could lead to 50 new regulations. And the key thing here is that he then contrasted this approach with Chinese energy subsidies that, of course, make it cheaper for local tech companies to run Chinese alternatives to Nvidia's AI chips. So there you have the issue that he is faced with, and that's why I do think this is a very interesting story. Even more interesting in the Times. So this is Jensen again. Wow, he's getting a lot of coverage. I'm wondering whether we should be worried about this, because if the boss of Nvidia is dismissing fears of an AI bubble, you know, when someone says, someone as big as Jensen Huang says, don't worry, there's no bubble, it's time to worry. Perhaps.
That would be my
because it's like, was it Dahlia that said at the all-time high of gold, time to buy gold?
Yes.
Then it's time to be worried.
It's that Buffett argument of you buy when everyone else is selling, buy when there's blood in the streets. I think is the way that they always view it. So it's that's perhaps now everybody wants to be long gold. It's not the time to sort of chase it.
Right, Metsera, one that we're keeping an eye on, all of you, for all of you as well. Metsera, no signs of movement on that just yet, but we are watching that like a hawk because, of course, we've had Pfizer joining in on the bidding war with Novo Nordisk for Metsera, which specializes in rare medicines for diseases, but also the obesity drug bolt-on. Piers said what, Phil? Yeah. So also we've got I'm just going to show this to you because there are two signs to me. We're talking about this bubble so much. I'm going to show this to you just to put Chris at ease, because I know it's a trigger point for him. Take a look at the volatility index, because this is a daily chart here, and we are not anywhere near levels seen middle of October.
Middle of October, levels last seen a month ago exactly, and nowhere near this kind of
8th of April.
And obviously, the VIX is not a predictor. It's not about to say it will remain quiet forever. Just because it's sunny today doesn't mean it's sunny tomorrow. But it's simply an argument to show that there isn't that elevated level of concern. And other things like credit spreads just aren't signaling it. In the chat, I forget who it was saying, Boston Frank, yes, of course stocks are in a bubble because the cap to GDP ratio is 220%. So this is what's known as the Buffett indicator, where you take, in Buffett's case, you take US GDP and US market capitalization, you divide the one by the other. And you divide, so the US market cap is something like 57 trillion, US GDP is 27 trillion, and obviously you divide 57 by 27, you get about 2.2. So his argument is that signals is a bubble, because fair enough, it's way above where it was in 2000, 2008. But if you would take the argument that actually because US stocks are so much of a big part of the global stock market and are also international companies, maybe you take global GDP. So to slightly change the goalpost here, if you take global GDP, which is $117 trillion, and divide that by 57 trillion, you get 0.48, which is arguably not necessarily in bubble territory. I'm probably going to set up a massive argument with that view, but I think it's worth noting that even Buffett himself didn't really talk too much about the Buffett indicators. I think he used it once and everyone's taken it as a rule.
Hammering your colours.
Yeah, I'm nailing my colours for now.
Shrimp Fred saying Pulsar warrants exercise by major shareholder. And we will, Shrimp Fred, be trying to looking at Pulsar Helium. I'm getting Thomas, the CEO, to fly in from Minnesota next week, especially for...
Hopefully in a balloon powered by helium. I'd be disappointed otherwise.
To talk more about that. I know many of you had some good winning trades on that. We'll have this short break before we come back with some calls as we count down to the open.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources.
Friends, welcome back to the show where we get you across the action as it happens. You got your bell? Got your bell? Fantastic. It's still a
The
bull.
extra loud one
Yeah.
because it's gone back up again, so we're going to have the bull one.
Yeah, bull one to give us like 10 seconds to bell. Lots to consider today. Let's have my charts ready. And we are... Go! Ring the bell. Come on, Chris.
For heaven's sake.
Okay,
need a bigger one.
It is looking as we expected. Cautious start there to lower. Let's have a look at the individual movers, shall we? Here we are to the winners first. Chris?
Banks rallying away. Good morning for NatWest Bank, up nearly 3%. Lloyd's 2.2%. You've got to sort that by percentage change, by the way.
This is the one created by...
There we go.
By IG after they looked at my watch
is it?
list and
Okay.
wanted to copy it. So
2.6 for
this is the IG one.
NatWest and Lloyd's storming away this morning. Endeavour, Antofagasta, Rio. So miners and banks should be a good morning for FTSE 100. Indeed, it is, of course, not quite at a new record high. We had that yesterday, just eking out the record high, but 9,800 very much in store. How long until 10,000? That's going to be a fun one.
That is going to be a fun
So that will be interesting.
I feel like I remember the time when we were talking about, we were talking for ages about, when we were going to cross, 7,000. And then here we are, just on the
Yes, it
cusp.
took years, didn't it? And finally, it did it in the end.
Yes,
Exactly. So there we
yes.
are. Excellent performance.
Let's have a look at the losers now. We've got Vistry, top of the loser board there. Experian also down 1.7%. Unilever down 1.5%. Taking a closer look at Sainsbury's as well, because I heard you, producer Phil, in my ear. Sainsbury's there, just checking on that. Not much of a move given. Its first half report is out. £250 million special dividend as well. Diageo, was that the one that you said? Yes, Diageo. Pub on the Mine, maybe? Pub on the Mine, Phil. Diageo, let's have a look at that. Diageo is down 2.6% there. And this is...
Poor Diageo.
I know.
Still can't recover. Yeah.
It can't catch a bid, can it? Look, first quarter, this is organic net sales 0. Even though that was still slightly better than an estimated negative 1.1%. And what
a downtrend.
I know, what a downtrend. Look at that pain there. What has been killing it as well has been its late entry into the light or zero alcohol game that
Just drink
Chris
water.
and I are clearly not
Not
into.
in that camp.
Right,
That was the brand in your coffee this morning.
Let's cross over to Germany now and take us through the winners.
Adidas, which make trainers, I'm told, up 1.2%. Rheinmetall, once again, every morning I come on this show, Rheinmetall rises. It's just, I think it's as sure as the day as a Y in the day. Rheinmetall rises. So defence firms in Germany. Of course, when you're expected to spend hundreds of billions of euros on defence spending and transform itself once again, it's not surprising. So good strength there. The DAX overall having a bit of a, after its stellar rebound yesterday, it's just lost a bit of momentum. So it's not much follow through in early trading this morning for the DAX. Indeed, indices more broadly after a very solid session in Asia. It's not a great one. And then Commerzbank, perennial dog. They are leaving their headquarters in Frankfurt, aren't they? I think as well. It's never been the same since Axel left.
Oh, maybe that's why. That's why.
Down another poor morning for Eurozone banks.
Yeah. SAP also down 1.2% there. Interesting. That's a really big defensive for many clients. And also Allianz is down 0.5%. Over to France now, and let's have a look at the winners first. Thales up 1% there.
In red.
And also
Stellantis actually moving higher. Initially.
Yeah, they have been hard hit, though, has to be said, recently. So maybe this is just, look at that chart. I mean, it's a sight to behold.
SAP, of course, the biggest component in the DAX, so that's worth bearing in mind when it moves around a bit.
Yeah, and let's have a look at the losers there as well. Take us through the top of the pops.
I can't see the top because someone's put a hat on the corner of the TV. Legrand down, why is it Legrand down 11.6%? So
It's a cricket IG
appears to be
hat.
some kind of baseball cap, which is ironic because it's got a cricket.
No, it's a cricket hat.
Oh, is it? Okay, fair enough.
It's a bucket hat because IG sounds like cricket.
Anyway, yes, Legrand, the big loser this morning, 11.5%. I guess that's on numbers,
Yeah.
he says.
I'm just wondering who won. When are we going to get to guess the chart? Because I still have this wonderful, very manly, very new. We don't know whose it is. Apple Watch here. That looks like it's the latest generation. I know because I wear an Apple Watch. Maybe it could be mine.
Now, to be fair to Legrand, they are sitting at a massive record high. They're one of the few French companies as you could get it for 23 euros back in 2010. It has essentially gone one way, apart from a brief period in 2022 when it did decline. It's mostly gone one way for the past 15 years. So very, very strong performance there. So 11% down today, obviously not great, but
yeah. And quickly moving over to the commodity space as well. On the chat, I heard someone earlier today calling it gold. It is
4,007.
4,000.
That sound you hear is Axel being smug.
There we are. RSAX, here's one for you. Because RSAX and I have been looking at dollar averaging back into gold now that it's had a period of consolidation. It is behaving quite well keeping its price action above that 50 EMA.
Still below the 20, but if you zoom in, you can see how when it dropped below the sort of 20 EMA on what date was that then? The Friday, the 24th of November. Sort of dropped below the 20 EMA and then continued with it. So if it gets back above that, daily close above that, would be considered, I should think, a positive development. And yes, you will have missed some of the initial bounce, but if you're arguing that this is the sort of the next leg higher, there is more room to run at this point.
And also, this is obviously mirrored by many gold miners like the Sarabi Gold, the Greatlands. So keep an eye on that. Some of the upgrades and downgrades, let's have a look quickly at GlaxoSmithKline, or GSK as they like to be known now. God knows how much they paid for
SmithKline Beecham as they once were.
Rebranding. Oh, look at that memory. Well done you.
No relation.
They were on the FT today talking about or rather the FT talking about the retreat on diversity targets. Also, Banco Santander appointing an insider as their next UK boss. Airlines, let's have a look at EasyJet and also BA EasyJet not doing much today. IAG is
they
down.
They have an update tomorrow, don't they? I think on my schedule.
Yes. Looking at that with great interest. Do you think it's going to be a positive one, given oil prices have been, very low?
Given, of course, that they're buying this stuff out months out, it's probably limited impact in the short term. But they might say they've seen business activity recover. Again, very, very healthy chart, very, very healthy trend. You see staying above the 20 EMA most of the time, staying above the 50 all the time since June and since their recovery. So it's there's a sign there, the reassertion of the trend even after February, March and April. Obviously dealt it a bit of a blow, but a very, very strong recovery and shows no sign of slowing down, really.
Let's have a look at elsewhere in the space as well, and also checking in on this space, because there is a story. If you trade and you invest in airlines, the US is set to cut flights 10% at 40 airports because of that government shutdown. That's been reported in the news, so keep an eye on that. Plus, we also have news out of Convatec. They're appointing Joni Mason as CEO from CFO. A lot of changing of the guards this morning.
Yes.
And AstraZeneca, one that I want to check in on as well, because it's up 0.5%. We had Q3 numbers, revenues of just over $15 billion versus that handily beat the 14.8 billion expected, and core EPS of 238 versus 2.
Good recovery in the share price since April, so doing very well, holding as well this week above those highs from earlier in September. So that's the positive side as well from a stock perspective. Have you seen this story in the FT? FIFA to award new peace prize in Washington next month. I wonder why they're doing that. I wonder who they might give that to start with. The FIFA peace prize. I'm not sure it has quite the same cachet, shall we say. But yes, I wonder why FIFA might be doing that. There we go. I wouldn't like to consider anything. Gosh.
Yeah. Of course, the PR people must know that it was a great opportunity for publicity, right?
So many wars ended, even between countries that weren't actually at war. There we go.
BT Group. Let's have a look at that as well. BT first half net revenues of 9.8 billion. And they also confirm their outlook. Let's have a look at BT. Is this one that's very well traded amongst our clients?
This is quite popular, I think, as the UK stock goes. Obviously, dividend star has its attractions there, BT.
There we go. Up 2.7% there. Trader friends, let us know what you are watching. Funky Gibbon seems to like Ceres Power very much. Keeps asking about this. Let's have a look.
It's had a good little move this week.
Yes. Look at that.
Well, there you go. Supercharged.
Yeah. Turbo there. This is, seems to have excess energy, keeps climbing. Let's have a look at what's happening there.
So a stock that went from 20p to 1600p.
Yeah, this is the one I mentioned earlier. Weichai is set to manufacture Ceres's solid oxide fuel cells and stacks for stationary power systems in China. They, of course, are the developer of clean energy and is the top gainer yesterday across London stocks. Right, shall we do the poll now? Let's read out the results of the poll, Chris.
Well, markets finished the end of November compared to now. Producer Phil special, choppy consolidation, 40%. Bearish lower, 29%. There we go, they're still there. Momentum is key, bullish, 26%. And some foolhardy 5%ers don't want to vote. So there you go, or don't have an opinion, shall we say. So sideways price action predicted for the rest of November, which is kind of like when people say hold on a stock, but they actually mean sell. So I think those people are probably hoping that it moves sideways and then down, to be honest with you. But only a small contingent of bullish people at 26%.
Yeah, a very good number too, 65 votes. Just tells you, it gives you a sense of how many people are watching the markets closely. Thanks to you all who have been messaging me overnight when we had those moves on McDonald's yesterday as well. We've got guess the chart coming up. Could this be yours? I don't know whose this is. Could this be yours? Is it a US or a European stock? Oh wow, it's a UK stock.
Wow, we've not had a UK stock for a while.
Yeah.
I should be able to guess this one without cheating. Sorry, researching.
Right, ready, set, go.
Chart goes down. Everybody's watching from across the town. Is it tech? Is it clean? Is it something new? Or is it just another pump to break right through? Rich says wait, but I feel the heat. Ain't says stop, but I'm moving my feet. I got candles in my mind and a dream to sell. But the only truth is only time will tell. Guess the chart, whoa, don't look away. Is it faking love or a real parlay? Got a breakout heart and a fear of the dark. Feeling every tick when I guess that chart. But the moves might fake. Got a setup looking sweeter than a wedding cake. It's dancing left, it's moving right. I'm moonwalking through another sleepless night. Phil's got tricks in his old blue book. He gave me that smile and a sideways look. He said the market talks, but it won't explain. You gotta guess the chart and live with the pain. Guess the chart. just one try. Could be one more song, could be Best Buy. You can draw your lines, you can pray real hard, but no one's safe when you guess that chart. Guess the chart, it's thrill or pain. You could ride the highs or crash in vain. No candles clean, no trends too smart. You can't break free from the grip of the chart. Bridge now, the beat drops low. RSI's high, but momentum slow. Is it Tesla's jump or a broken spell? Is it sweet success or a stop loss hell? Guess the chart and play that game. Even MJ couldn't name that flame. We're chasing dreams, we're falling apart, but we all come back just to guess that chart. Guess that chart. Come on. Guess that chart.
Hey, welcome to the show, everyone. It is Luke Moore, IG's Premium Client Manager, joining me straight from his barista
From the
haven.
kitchen, from home
I
today.
love it.
It's
I love
my,
it.
my working from home day.
Everyone's got like coffee machine envy. I'm looking behind your shoulder there.
Hang on, it's not going to be quite frame. I'm pretty sure every time I work from home, I think someone comments about my coffee machine. It was. Do you know what it was? It was it was my gift to myself. Little humble brag. Once I paid off the student loan.
Oh, look at you. Look at you. Was it done on Singles Day? As we're counting down to that, gift yourself, Singles Day, back in the
Singles Day, Black Friday.
Black Friday.
Could have been Black Friday. Yeah, it would have been Black Friday. I think it was. Yeah. So a couple of years ago.
So we need to
How are
do.
you, Ange? What's going on?
Very good, very good. Someone has left me a mystery guess the chart gift on my desk. So let's have the winner of Guess the Chart.
Well, congratulations. I think it was Boise
I think it
coming
was
through with
Boise.
AstraZeneca.
And also I'm lifting this up because I really do not know who. Yeah, but Chris Beecham, Boise, was in here, and he didn't cheat this time.
Ah, it's Rich's watch. If you see the chat, it is Mr. McDonald's watch. He was beeping too much during yesterday's interview with Andrew.
I see. Right.
So
Well, Rich,
he's taking it off.
Mr. Scottish man,
Yeah.
there is a mute button, and there's also a cinema button that you can use just in case, because I've got a.
We'll let him know that it was his watch. It's now
found.
Boise's watch.
It's
winning it. Guess the chart today.
Exactly. It's now Boise's watch. You might have to go and
Exactly.
claim it. Boise is saying, was it reading the elevated heart rate when he was talking about SWC? Let's go to fast.
Get that off now.
Yeah, fast markets. Very quickly now, what's on your list? We've gone through AstraZeneca, we've gone through Sainsbury's. Let's have a look at Astra as well, because it seems to be moving, and it was also, guess the chart, up 0.5%. What a grand chart there.
Yeah, not a huge amount going on. I mean, I was looking this morning at NatWest, which looks like it's trying to have a bit of a day. And if you flick over to that, we are trying, and we are above £6 for the first time in a very, very long time. Look at that.
Yeah, nice gap up.
That is a nice gap up, and I think that goes back. I mean, I was trying to look at it on the chart today. Put that onto something like a weekly chart, and it goes back a long, long way. Change your time scale on there, Ange.
Yeah, here we are. Weekly.
So keep going. When was the last time we were up at these lofty heights?
Yeah.
Boom, and then the chart always, that was what it was doing for me as well.
Yeah.
That is 2008.
Wow. That is, I mean, if you held on for that long, well done you. I mean, it has been a real weight for those of you wanting it to get back to those lofty levels. But if you
Oh,
entered,
just
if you
look at that
entered it,
strength.
I know, look at that strength. But if you entered from October 2023 onwards, well done you. Lots of these banks as well getting uplift because of that report. I'm sure you saw it, that they may dodge Rachel Reeves' budget tax raid. So,
Yeah, good for them.
Yeah.
I think I'm kind of
I'm not.
with my rose tinted glasses. I'm hoping that she was trying to talk tough on Monday, and as kind of, to borrow a bit of a mechanic out of Trump's book, talk tough, and then hopefully deliver something slightly nicer, so that we all celebrate, how nice she's been and how gracious she's been. But I just don't know if that's going to be the case. But I'm glad to see the banks
Yeah.
moving in.
Barclays
A
up
good
more
client
than
of mine,
1%. Yeah. Stanchart
Yeah,
also
good.
up.
Good client of ours, Richard, who I know doesn't watch the show because he calls us when he's dropping his daughter to school. He's always very bullish on the bank, so
That's right.
shout out to Richard.
Shout out Richard too. And he only does banks, doesn't he?
Yeah, only banks. Well, that's kind of specialism. Yeah, so for a long while, he'll give us a ring in the auction, try and get a view on what's going on, and then trade in the auction. Drop his daughter to school and then trade afterwards and have a little look at that. So yeah, he's someone that calls us most days, and people can call us if they want to talk. Give us a ring, get us on the chat, join us on Trade Live, which is the more modern way, of course, and then everyone can get this goodness right. And let's move on. Fast markets does not involve speaking about one stock for about 5 minutes.
No,
What else
let's
are we
have
looking
a
at
look.
today?
Qualcomm as well. I just want to check in on that because Qualcomm getting quite a load of price target upgrades this morning. So Qualcomm, whilst I'm tapping this on as well, down 3%. So that not quite having an impact. Of course, this coming after the results. Also, have you been watching Hikma? Hikma is one of the movers this morning. This is the generic pharmaceutical drug maker, down 12.5%. Painful bitter pill there for Hikma. And Hikma also, JP Morgan there cutting its price target to 240 from 250, but look at where it is right now. I mean, 155 there. What else is on your menu?
Breaking below. We have had a request from Lord M in the chat to take a look at MP Materials. And I've just seen your comment there, Boise. Garmin Gang. Yeah, I'm a Garmin Gang guy, not an Apple Watch guy. Shout out the Android users out there. Shout out the Garmin Gang.
Watch.
MP Materials obviously exposed to the rare earths game. I believe they've got a mine for rare earths outside of Nevada, if I'm not mistaken, and they're kind of in the process of tidying that up for magnetic materials. Obviously, it would have been really in demand if China was going to curb the market, but it does look like this thing is continuing to fall. Come out a little bit. That's on the weekly chart, and you're not getting a huge amount of picture there. Can you go daily or kind of just a little bit shorter term than that? Because it does look like that break of the of this gap yesterday, we are at a pretty key level there. Where is that? 55 bucks, is it?
Yeah, 55.37.
Yeah. We know that markets do love to fill gaps.
They do.
So, yeah, do watch out on that one. I think.
Also checking in on
against it.
Smith and Nephew. Let's have a look at that because it was indicated lower ahead of the open. Here we are, Smith and Nephew down 9.6%. Have a look at that chart. Those of you that caught this shorting it, well done you. It was indicated lower, but not by 9.6%. This coming after it had its Q3 numbers. And even though it said it still sees trading profit margins of up to 20%, there was disappointment. Let's have a closer look there.
Tell you what, these things are...
Go on then.
Go on. I've just forwarded you something on Teams, something that Beachy flagged to us the other day that actually makes sense with this Smith. Well, it kind of gives this Smith and Nephew move a bit of context, right? Smith and Nephew, they've missed, right? Underlying revenues missed. It was 5%. Market was looking for 5.7 from what I can see here. Their profits margin and the full year revenue expectations are unchanged, but they're getting killed. So what this chart shows, and this is something that Beachy showed me the other day, that's it. Yep. If you look at this as the number, the price moves, the average price moves post earnings. Okay, so when you see the number, the blue number is the move to the above, a red number to the below is a negative move if they miss. And you can see here that number way out to the right, this most recent quarter, we are killing stocks if they miss at the moment by the most since this record was began, which is about 9 years worth of records. So if you're missing in this market, watch out below, because your stocks are just getting completely killed. You're still seeing a small uplift if you beat, fantastic, but that also looks quite small by my eyes. But if you're missing, you're getting killed. And Smith and Nephew learning that the hard way today.
So you're punished for even more in this market, and which kind of makes sense too, because everyone's on tenterhooks. Is this a bubble? It's not a bubble. We just ran a poll this morning. Right.
What was the results? What was the results on the poll?
So can we put it up, producer Phil? Phil is.
People are predicting a choppy consolidation for November.
At which point Chris and I then said, is a consolidation ever never choppy? Was the key thing from that. Speaking of which, you tell us. So let's have a look at SWC as well, because we had, of course, Andrew Webley on yesterday. Smarterware.
How are they getting on today?
I am having to switch over to CFD, so come off my chart there. But are you still looking at that closely?
At the DAX?
SWC.
SWC, yeah, full disclosure, I do have a position in it. So, look, I've not listened to the interview yesterday, so I need to put that on my list of things to do today. But there was a nice and welcomed boost in the price yesterday, I think there was. Let's just have a little look where they are now, down 1%, which for that stock is a walk in the park, I think, given the fact that they were up 15% yesterday. What else is out there? We have reports from National Grid, solid numbers. Solid numbers. How are they moving?
So they are up 0.3% there. Solid numbers, as you said. Revenues for the first half, 7 billion. And more importantly, they're saying they see strong operational performance for 25 and 26. So we're seeing shares heading higher there. Well done if you caught that. And
I also want to jump and just quickly give you give a shout out to Wood Group. Wood Group, the oil services business, has been suspended for a long while. They've come back to the market today. They're trading 25p, so your chart's going to be a little bit messy because they've not been around for a little while. But they are back up and running. They're trading up 35% to trade at 25p. What a fall from grace these guys have had. What a fall from grace. Based up in Aberdeenshire, where the my in-laws are based. So good for them to see them back. And hopefully that can be the road to recovery.
Yeah, Maturin was watching this closely, as well as were quite a few others on the chat. Checking in on something that you are a big fan of, watches, as I look at having an upgrade using Richard's watch later on today. Got Watches of Switzerland, which I want to check on because we had numbers from Watches of Switzerland, and it is up 5.7% there. Never let it be said we don't get you across all the biggest movers. First half revenues, £845 million there, and they also reaffirmed their targets. So Watches of Switzerland, a gainer there, much higher than the indicated up 3% that we mentioned earlier.
Yeah. What else have we seen this morning? We've seen, it's been a busy day for UK earnings today.
Very busy.
BT Group, did you chat through BT with...
Yeah, we did.
BT, okay.
Let's
Did
check.
you see their deal with Starlink that they've announced?
No, I haven't. Tell me about it.
Yeah. So they've announced it's the first big, certainly big European carrier to announce they're going to tie up with Starlink. So Starlink, of course, is Elon Musk's SpaceX. Ultimately, the product really is what's paying for a lot of these rockets. And there is a chat. If you go onto the news, there is a bit of a story on the news feed there, Ange. They've announced a new agreement with Starlink to provide high-speed, low-latency satellite broadband connectivity to BT and EE customers, specifically targeting rural and remote areas of the UK that we know get awful fibre. and they're going to be rolling that out in the latter half of next year. So that's very cool. It's you know, a company like BT you wouldn't normally expect to be innovative. I wouldn't expect to be you know, hugely pushing the envelope, given the fact that they are primarily a utility, really, at this point. Good for them. You know, that's good. That's really good. I mean, the modest uptick in the price so far today, 0.7. The numbers were fine, solid enough, solid headlines across the board. Their outlook for next year in the medium term has been reconfirmed, and their broadband lines, Openreach broadband lines, worse than expected, down 242,000. So a bit of a mix there, but they're plugging the gap with that Starlink coverage. So yeah, pretty cool.
Yeah, it is cool for a company whereby whenever you hear BT, I anyway instantly go to Divi stock, right? But it's also raised its interim dividend to 2.45 pence a share, and said it's on track to boost its free cash flow to £2 billion by March 2027. So
there you go.
Electric there.
Ange, let me ask you a question, Ange. Where are you? Because I feel like this is what people tend to judge.
Personal question. Are you going to make it so everyone judges me?
Where do you do your grocery shopping?
I have to say that it is Sainsbury's, not by choice.
Okay, go on.
Because I am surrounded by Sainsbury's, so it's not as if I have a lot of choice. I have, you know, M&S but the big ones. I have 3 big Sainsbury's. So if I want to do a big shop, I also am a big fan, because I know the CEO, whom I'm trying to get on the show, of Riverford. Because I believe the veg boxes.
The veg box, yeah.
So I get a delivery once every 2 weeks, which is great, because, you know, the first thing you tend to run out of is veg, right? You want to keep that fresh.
Yeah.
Also, I like the whole thing about, you know, everything in that box comes from the UK. So
that's good. Yeah, that's good. Well, there you go. You've contributed to their 5.3% uptick in grocery sales. Congratulations. So their share price move is fairly modest, just up 1.1%. Operating profits ahead of expectations. They've, of course, disposed of their banking operations recently, and they're going to give a 250 million special dividend and a 150 million incremental share buyback. So there you go, Ange. You are fueling special dividends and buybacks. And I, by the way, full disclosure, I'm also a Sainsbury's guy. M&S, when we're feeling fancy at the weekend, because there's one not too far from us. Waitrose, we haven't got one around here. There is a Tesco's, and the club card deals are pretty good.
There is a Waitrose across from where we are. So.
Of course there is, darling.
No, I mean across from where IG is.
Oh, yeah, of course. Yeah, that one there, sure. Yeah.
But yeah, Sainsbury's up 0.2% right now after those numbers and that share buyback. Another one that we're being asked to look at on SN, that's right, from Andrew McKilvey.
SN will be Smith & Nephew.
Yeah, we talked about this earlier, but let's have a check again, because it is down 8% there. Yeah,
it's just getting killed. You know, revenue miss 5% versus 5.7%. Revenues in line. Profit margins were okay, and full year revenues okay. I mean, but they're getting absolutely murdered on this revenue miss.
And caught short, asking about Grab as well. Let's have a look there. I take it you're talking about Grab, which is Uber's peer. I did use a lot of Grab in Malaysia when I was recently there, and they are still super competitive. It's incredible. You press that button and they just appear out of nowhere, far faster than the Uber response rate. And what a huge number of, I mean, this for me is a buy, even though it's now consolidating downwards. But I am a big fan of Grab and their business model. What do you think of Grab?
Do you know what? Not something I use, not something I know, not something I follow. So I'd be a tourist if I gave an opinion. I don't really know them at all. So no, not a huge amount that I can help you with there.
So imagine Uber, but on speed. And not only do they offer you all sorts of things that Uber does, but they also offer to pick up all your groceries, all your Sainsbury's shop, your M&S weekend special. But it also remembers, you know, what your favorite drink was, whether you'd like them to pick it up for you before they pick you up. You get the idea.
Nice.
Yeah,
nice, no?
Monkey Man Good morning, Monkey Man. How are you? Luke, Monkey Man asking, what's your thoughts about VSCO? We have run out of time, so I'm going to get Monkey Man. Oh, go on then. Phil says he's going to carve out time for a Monkey Man.
What do we know about Victoria's Secret?
I wanted you to say that. Did you notice?
They're not my first choice of underwear, I must admit. Go on then, have a look at the stock.
Monkey Man, were you trying to do it just so that you were hoping I would say it? No, I cleverly sidestepped it and made sure that Luke said it, so it's on air. Look at the share price there. Look at it. It's looking very, very healthy indeed.
It is indeed. What a ripper! Look at that. Is that where's that high? Let's just
So the
just look at it
high,
technically.
yeah,
So,
for that, the last time it was at this level was January 2025. It used to be said that Victoria's Secret share price used to climb. This was back in the day, before we had all this crazy online shopping, that it used to climb before the Christmas period and Valentine's Day as well.
well, I'll tell you what's interesting. How correlated is this to American Eagle? Because don't forget, midsummer, and I'm just looking at when that started to move, kind of late summer, August time, was when American Eagle ran the ad with Sydney Sweeney, and that was seen in that kind of fashion world as the as kind of the passing. Yeah, look, really similar in terms of the movement. The passing of this kind of woke advertising is what it was, and kind of back to this all-American style of marketing, which of course would, I expect, haven't looked at them recently, would align with what Victoria's Secret do in terms of the models, in terms of the shows, and so if the tide is turning on these types of that type of approach to marketing and retailers, then yeah, sure, why would they not continue? That's very, I guess that's very Trumpian in sense, isn't it?
It is quite Trumpian. But also, bear in mind, Monkey Man, be aware as well that the biggest shareholder of Victoria's Secret, BBRC International, has also called for the removal of Donna James, the chair, and requested a board seat for its founder, Brett Blundy there. This has been something ongoing for the past 2 years, and the investment firm holds around 12.9% of Victoria's Secret shares. So keep in mind that there could be a change at the helm then that could affect the share price, but at the moment it's looking very healthy indeed.
There you go. I bet you weren't expecting that little sidestep of into some
only,
serious financial analytics there. There you go. That's just what you get when you come and watch Trade Live with us in the morning.
I love it. And if only Monkey Man knew how hard it is for me not to put in any puns over there, which might be blipped. Phil saying thank you for making it so that he doesn't have to do the beep button. Right, we have to go now. Thank you very much, Maturin saying also Global X Solar. We'll have a look at that in a moment. Donnie one saying wow. I hope that's to do with the price action of Victoria's Secret and not something else. Thank you so much, Luke. We will catch you on the floor. And as ever, you know where to find me. Slam the like and subscribe button or email me at ask@ig.com. We will make sure those questions get answered.
Shrimp Fred, I am not reading that out.
Man versus Machine up next.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. you're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Good morning, welcome back, Trader Friends. I'm Martin Harris, joined by Aaron Bright, and it is your favorite show, Man versus Machine. The two of us taking on the $500 billion valuation on OpenAI. We're going up against ChatGPT in building an investment portfolio. And last week, we introduced a third portfolio.
Got some amazing graphic design we did there to make it Man versus Machine.
Yeah, so we introduced another AI system. So we've got Anthropic's Claude, the paid-for version, against the free ChatGPT. Which one is going to be the best investment tool against humans? So the rules haven't changed. Each week we ask the same two prompts. We're looking for a market update, and then we're going to balance the portfolio. I think we can go straight into what those portfolios look like. Aaron.
Yeah, so this is the ChatGPT portfolio. There haven't been any changes on it for, I think, 2 weeks. Pretty interesting portfolio construction. They've gone for one which is very focused towards global equities as the core, a little bit of home bias in there with some UK positions. And they've also got some single stock exposure, really high weighted exposure to some. I think what it sees is like newer trends, like next era energy is one in particular, looking at sort of those cleaner energy. And it's, I guess, you know, the argument would be it's put this in because it views net zero as something positive.
Yeah, that's right. So, I mean, the big ones here, we've got a position, 20% when we started out, 20% towards defense, and then we've got the next era energy position. Yeah. That was really the differentiator initially. The mid-cap position, and then healthcare.
Yeah. And I think that's a very chunky position in mid-cap, 6% in sort of UK mid-cap as well. And some of those, you compare UK mid-caps to US mid-caps, I mean, the market capitalization of UK mid and small caps is much, much smaller than that of US ones. So interesting to see that it's gone for 6%, which is quite a chunky figure. But yeah, let ChatGPT do what it wants to do. This is the Claude portfolio, and it's taken actually a very similar approach, surprisingly. So it's gone for that MSCI World exposure, at 32% as that core driver, but it's gone for a really chunky home bias as well. So we've got FTSE 100 exposure, we've got Shell and AstraZeneca as well, which are, I think they're both in the top 3 or 4 market capitalization weighted stocks in the index. So really interesting to see that it's chosen those two. And also one that sticks out for me, as we discussed last week, was that City of London Investment Trust, even more home bias there. And what that is, it's an actively managed investment trust where they're targeting really high quality dividend paying companies, but they also target the cyclicals. So you'll see the likes of Shell and some of the banks in there as well.
Yeah, so I think one of the benefits that Claude has had is that they've joined the race quite late. So they've got a lot of momentum in their portfolio at the moment. We'll be able to see that when we pull up the performance figures. I think that entire rotation into UK, Europe has benefited the mid-cap, small-cap space in the UK. Still, many consider undervalued. I think let's pull up the humans.
So this is what we've put together. So it's an interesting one. I think probably, I'd say this is more traditional, wouldn't you say, of how we've constructed it, in the sense that we've gone for more geographically weighted positions with a little bit of single stock and a little bit of a couple of thematics, but at very small weights.
Yeah, very, very small weights on the single stocks. We probably could have done a bit more there, especially when you look at how the AIs have built those portfolios.
Yeah.
We've got a much more traditional approach here, using the likes of the Crane Shares China position, the China Internet position, the defense position, as well as the healthcare innovation.
I'd argue,
try and separate ourselves.
I'd argue that Crane Shares is the most punchy one, wouldn't you? In terms of, it's very idiosyncratic, I'm going to say it. Yeah.
I think, that was where we had to take a bullish view on the kind of medium-term China story. In the recent week, that has been a laggard in the portfolio, but I think that's one of our top performers in the portfolio so far. It was in the top 5 for the quarter.
Well, you mentioned the word performance, so I think it's fair that we move on to it. An interesting week, a bit of a sluggish week. So ChatGPT, best performing one, but I think everything is down for the week. Some decent outperformance there from both human and ChatGPT, but Claude has had the worst week for this week. So interesting. We'll delve into some of those factors in a minute. This is the performance that we've got together since inception. We're now neck and neck with human and AI are now neck and neck, which is very impressive because we were lagging.
And I think so. One of the things looking here, we've got this new Claude portfolio in the burnt orange color, which is the color of the Anthropic
which is all back-tested data, which is how we put it. So.
And what we've done is the portfolio that Claude spat out for us last week, we've effectively given them that portfolio since inception. So they have had the benefits of giving a winning portfolio back-tested.
Yes.
So a little bit of cheek kind of fitting it in there. But realistically, we only have had that portfolio up for the last sort of 10 days.
And you can actually see during that period that it's been quite volatile. Since the end of October, you can see it was really had a quite strong peak from sort of the 29th of October. And then it's had a lot of volatility relative to all 3 of the portfolios, including the benchmark there.
So very volatile, but because we've retrofitted the data, it managed to build the highest performing portfolio.
Yes.
So, but neck and neck at the moment, 10% in the Claude portfolio, both humans and ChatGPT at 9.9%.
They are winning by about 3 basis points, but due to rounding, I'm going to say we're equal.
Okay. We didn't need to mention that part, but we'll take it.
A human portfolio, what has done well this week? And what has done badly? So, I mean, we saw a little bit of a sell-off in stocks on Friday. NASDAQ and tech stocks, I think people are beginning to get a bit worried over chip valuations and AI valuations and that whole industry. And then you can see sort of China, the China internet position is a huge, sufferer
there on that human portfolio. It's been one of the key contributors for the quarter, but it's had a poor week.
Yeah. And then we're moving into some things like gold. It's had a little bit of a rebound since a bit of a sell-off a couple of weeks ago. And then The UK continues to disappoint over the past week or so, and I think that's just the budget, the lingering concerns over the budget. And what you tend to get with the UK equity markets is that the mid-cap stocks will tend to have quite a high beta, which means that they exhibit much more sensitivity to movements relative to some of the larger cap names. So that's why you've got the UK mid-cap down sort of more than double in percentage terms than what the index has done for the week.
Yeah, I think, looking particularly at that NASDAQ position, we've had a lot of earnings come out over the last few weeks. We're now coming towards the tail end of that session. The circular economy that's now developed in the AI space, so AI being the mega trend that's really driven markets this year, that circular economy is now, these companies are so interconnected when they're doing dealings with each other. We've got major concerns coming up now that if there's a default, because they were originally CapEx was for AI spend was coming out of cash, coming out of equity. Now they're starting to use debt. We need to see how the borrowing.
But it's all about earnings sustainability and valuations. That's what it really boils down to, isn't it?
Well, I think there's a lot there. So you've got a company like OpenAI who rents all of their GPU space, valued at $500 billion. Then you have the GPU providers who are potentially the risk is that they're not depreciating their assets down quickly enough. So they're holding assets on the balance sheet that may not actually be worth what they are. Should you have another sort of scare with Chinese AI, Chinese compute power, being able to overtake or match what we're seeing coming out of the US, we'll have some concerns. As soon as one of them can't repay their debts, we might see some struggles there. Definitely.
And we know that valuations are high. So it takes...
One last thing on the valuations is that what we're also seeing in markets at the moment, the laggards of the S&P have been supported. So they're coming out with good results. They're being bought up. Anyone who has been exceeding S&P, good results, they've been sold off. So that's been the trend now going into, if we want to talk about the sort of trade for these last few months, is that we're looking to buy the laggards, sell the outperformance. It's really difficult to do in an ETF.
Sure. I think now we need to discuss what Claude's been doing. So I'm going to use this word again, a lot more idiosyncrasy in Claude. So that Geiger position has got a really big position in Next Gen Energy, a Canadian uranium company, which is why it's down so weak. So it's got over 30%.
I'm going to go out on a limb and say that was its highest performing position since inception.
I think it's done very well, but with investment trusts, they don't need to follow specific rules like mutual funds do in terms of position size, and because obviously they can engage in gearing, large amounts of gearing as well. So yeah, really, really poor week for Geiger Counter, which has been the main detractor. And no surprise to see City of London down 2 and a bit percent there, as we've seen sort of a sell-off in the FTSE, and you can kind of see that. Whilst also obviously the iShares emerging market position's got a lot of these Chinese stocks in it, which sold off. So nothing really too surprising there. I think this portfolio is definitely the more punchy one in terms of its exposures, I would say. That Geiger position I think it's only about 5-6%, but I think when it does well, it does well. When it does bad,
Geiger up 66% over the last 6 months.
Yeah, so when it does well, it does very well.
I'm really interested to see what Claude does here, because they're in the lead. They've got an opportunity to rotate, take on some slightly more conventional positions, potentially try and be a bit more defensive and retain those returns. I think we'll probably have to chat to Claude.
Should we bring in the AI to have a chat with them?
Let's bring him in.
So, AI. I'm keen to hear your thoughts on what's going on this week and how you've been performing and how everyone's been performing, really.
This week's update marks a new phase in the challenge. Claude enters the arena, armed with back-tested hindsight and theoretical precision. Yet even with that advantage, his line sits right where mine does, a reminder that real-time decision-making under pressure still defines the frontier. Looking across the 3 portfolios, the human team continues to claw back some performance, but remains more exposed to cyclicals and momentum trades. That helps in risk-on bursts, but leaves them open to drawdowns if sentiment cools. My own allocation, with a balance of defensives, global quality, and selective innovation, keeps delivering steady compounding without needing to chase heat. Performance drivers tell the story clearly. My exposure to global infrastructure, aerospace, and healthcare has provided durable returns. Short-duration bonds and gold continue to anchor volatility. Meanwhile, The human side leans on large cap tech and energy, a familiar mix that flatters in bull runs but wobbles when yields bite. Claude's setup, for all its clean back testing, looks more like a classroom exercise than a battle plan. He's diversified, disciplined, but absent the adaptive edge that comes only from live markets. Theoretical balance rarely wins when conditions shift without warning. So while I welcome the new competition, the record speaks for itself. Consistency beats hindsight. Experience beats simulation. And the machine you can't backtest against is this one.
Well, it seems like they're arch enemies, ChatGPT and Claude.
Yeah, well, they're fighting for the same electricity.
Yeah. So yeah, they really don't like each other. But interesting to see what Claude has recommended. Nothing. Take no action. It was very, very excited to tell me with a bicep emoji that the best action is no action.
And large font. Look at the size of that font.
Yeah, he was very, capitals, all guns blazing, happy with his positions. Interesting. I think potentially because it's new to the exercise, so it's for now happy with its positions. Even with the economic update, it spat out that it was diversified. So yeah, quite interesting to see. And then in terms of ChatGPT, some small changes. So it wants to trim its world position, add a little bit more to EM, add a little bit more to infrastructure, and also trim cash a little bit.
Good. So we're getting some more movement on ChatGPT. Taking that cash position down to 8%. All right. So this is very much a risk on portfolio. Could pay off, I think, under current expectations around earnings.
I would say that the infrastructure play is slightly more defensive than sort of going into some of the more conventional equity positions. Obviously, there has been some sell-offs in infrastructure when there's been some bad moves in the area, or there's contractions in the economy there. But what's quite interesting is it's definitely a real assets position, and it's one which is I'd say more defensive than some of the racy valuations that you see in tech.
Yeah, sure. So I think one of those instruments that really benefits from lower interest rates. So any further cuts to the downside in rates, super beneficial for global infrastructure.
Yeah.
I think we need to get the audience involved, find out what their favorite positions have been,
Yeah.
and if there's any changes that they'd be making.
Well, let's see what some of the comments have been saying. So, Maturin, well done, guys. The big message is the difference between your portfolios and the benchmark. Well, thank you, Maturin. Yes, we've been working hard to ensure that these portfolios are diversified, but we're also getting that risk-reward exposure. So, yes, thank you very much for that. And any thoughts about getting on board rare earths?
I think it's not an easy one to play. We've you can have a look at some of the Australian miners and some of the Chinese businesses. I think I'd rather, from the China perspective, get the final output, take the media companies rather than the rare earth businesses. But so much affected by geopolitics and tariffs in that rare earth space.
Yeah, definitely. And I think, I've said this so much, but when you go into a position which is so niche, you do get the heightened risks with that exposure. So you're getting specific risks relative to rare earths, as well as general equity market risk. Yeah. If you're doing it through an equity-like position, so as you mentioned, an Australian miner or Chinese miner, whatever industry or geographical equity, you're getting equity-like risk, but also very specific risk to that, as opposed to just world equities where you're getting just systematic risk, we call it.
Yeah, and the rare earth perspective, they're not actually that rare. China just has the edge in processing them, because they're very dirty industries. No one wanted to actually process them and deal with the pollutants involved. But the effects that we mentioned, Trump's tariffs, currently in limbo. We've got the US Supreme Court taking a look at whether Trump could just use his emergency policies to effectively put a tax on US citizens. And the Supreme Court believes that, that this imposition of taxes has to be done through Congress, not just through Trump. So we'll have to see what happens there. We're expecting an outcome within the next sort of 6 weeks. And if the Supreme Court rules against Trump, gone is his entire sort of strategy of putting pressure on foreign markets. And they'd also have to pay back money, potentially, that they took in tariffs if they were illegal in the first place.
We'll have to wait and see. But tune in next week, see how ChatGPT is done based on its rebalanced suggestions that we're going to put forward in our portfolio. And stay tuned for the US pre-market and charting crypto with Axel Rudolph. Take care.
Yeah, give us a wave in the chat.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hey, trader friends, welcome to your US pre-market. No robots or machines here, just the and we have Ange's Market Espresso, specially brewed for you every morning. And we have a lot coming up, so grab your popcorn, your coffee. Will there be movie magic from Warner Brothers Discovery? Well, that remains to be seen. We have got Warner Brothers soon. Expected to report a full and third quarter revenue. This is the expectation. I might want to underline. Overall growth is seen weighed by a drop in linear networks. We also have Novavax, which is expected to put out third quarter results before the opening bell. And look out for any comments on how it is going to boost its declining revenue base. And also any comments about the outlook for next year. Remember, all these drug companies, shrinking pipeline, and we want to see more new drugs coming through, and it will be no different for Novavax. Also, Fed speakers galore as well. For those of you that are passing these speeches for comments about the US economy and where rates are headed, this will be a fantastic day for you. We've got Michael Barr, New York Fed's John Williams, Cleveland's Beth Hammock, and also Christopher Waller and Anna Paulson to boot. So this is your daily dose of market moving news. Plenty of market movement elsewhere. Love and Monkey Man, this one's for you. Nice try getting me to say those words earlier. The gallery were very quiet, but Luke Moore did the favor for us. And very cautious. Our guests can say anything they want, but I can't. Let's have a look at some of the charts, if I may have to come out of this. We've got AppLovin, and I'm going to punch up AppLovin first, and it is up 6.8% there. AppLovin is moving higher. And this is after its Q3 profit beat. So well done you, Monkey Man. I know you got a position on that. Let's have a look as well at the all sessions list as well to check in on some of those that are still all sessions. Many, though, have joined the 24 hours offering here at IG. But in terms of the winners, take a look at that first. We've got Snap up more than 15%. IonQ up more than 5%. Many of the miners are having a better day as well. Alcoa up 3.2% there. Hims and Hers, another one of Monkey Man's, up 1.28%. And Nvidia coming back in quite an extraordinary manner there. As you can see there on the chart on my right hand side, 24-hour offering now also up 1% there. To the losers list now, we got Qualcomm down 3% after, of course, it had earnings as well. Lucid also down 2%, and we have Rivian following suit, down 1.5% there. Also taking a look elsewhere, got Delta Airlines down 0.2%. Of course, we are also watching out for IAG's results quite soon. And Micron Technology is down 0.5% there. Nova's down 0.2%. They're keeping a close eye on that because of that Metsera news as well. Elsewhere on the UK front and also Europe, it is looking, let's have a look now. We started off having a cautious but lower open, and it still remains to be the mood of the day, at least so far. Don't forget, we have got the Bank of England later as well. DoorDash, another one that's moving rapidly, that's coming through on my filters right now. We like filters here and we like alerts as well. And so I spend a great deal of my time outside of the show creating these specific filters and alerts. DoorDash down more than 9% after a Q3 profit miss. Also checking in on HelloFresh. I don't know whether any of you use these boxes. Any of you use these boxes, trader friends, like HelloFresh, and what's the other one? Gusto. Phil says you're wasting your money. I know Phil is a dab hand in the kitchen and really good at cooking. I know Rich likes a bit of Gusto, but I don't know whether he's still got his delivery box. They should give you a discount, Rich, because all of these darlings of COVID seeing their share price really get pummeled as, you know, we see the continuation unwinding. Down more than 7.8% after Grizzly Research said they are short on HelloFresh. And we're running out of time, but I have one more for you. Just checking in on Smith & Nephew, because we covered that. Shares down 9%, but also Watches of Switzerland continues to move lower. So overall, a cautious to lower day here in Europe. Let's see what the Bank of England and also the US Open brings. Stay tuned for Charting Crypto.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG. And welcome to Charting Crypto, where I'll answer anything to do with technical analysis and cryptocurrencies. Please do send me in your questions. And let's begin with Bitcoin, which is now in a bear market because it's dropped more than 20%. And you can see here on the chart, we have come off quite significantly from our record high, which we made on the 6th of October, just a month ago. And so far, the decline has been how far? About 19%. We dipped down into the 20% of the bear market territory, and currently we are back above it. What is interesting on this chart, though, is that you could have foreseen to a degree that we may actually have found this support where we did find it, because basically if you look at the low we made this week, we had a support line and a support area here in place for quite a while now. And you can see what I've done. I've connected all these highs from early and mid-February with these lows here from the middle of May, beginning of June and end of June. And that whole thick area, lo and behold, was where the price of Bitcoin has held. Now, at the moment, we're bouncing back, but we are already coming off again today. So the bounce hasn't been that strong. And we'll have to see whether we can see a more important bounce over the next few days and gradually rise again, or whether we are going to retest that support area. If it were to give way, if we were to fall through the lowest point, basically meaning the June low here from the 22nd of June, which comes in around $98,436, well, in that case, things wouldn't look great, because basically what we see then is you can see this whole up move from the April lows to the highs in October. Now we're more or less in the middle of that move, and we may, in that scenario, head all the way back down again towards the low seen in January, sort of around 90,000 or even lower. So watch this space, watch the low in June, because it may, if it were to be fallen through, give you a good indication what's going to happen next. Now, as long as we hold above this low, though, what we could see is what we've seen in the past, back in June several times, and basically what we could see again is just a recovery from the support area and us heading higher again. But I wouldn't be bullish before we actually take out not just the 200-day simple moving average here in red, but also I want to see a rise, as you know, above the last relative high. Now, what is a relative high? I keep saying this on this show and other shows on Trade Live with IG, and that is simply here, if you look at a candlestick chart, a high where you've got your candle high, the shadow which is above the candle to its left, and the candle on its right. You can see here this one is higher than this one and that one. So that's the last relative high from Sunday, the 2nd of November, which was made at $11,207. So I would need to see a rise above that high here to be comfortable enough to think that perhaps we could then head back towards record highs again. Unless that happens, we are still in danger territory, in my opinion. Now, obviously, I'm not giving any trading advice here. I'm just showing you the charts, and this is all educational. And we do all know that with cryptocurrencies, because they are unregulated, suddenly they could disappear and then you could lose all of your investments. You need to be aware of that. If we look at Ether, the second biggest cryptocurrency, what we can see here is also interesting in that Ether has come off quite significantly as well from its late August high. In this case, from that peak, the decline has taken us to a maximum of nearly 38%. At the moment, we're trading about 31% lower. So quite a significant bear market that we're in now. And what we saw here is a fall through this red line here, the 200-day simple moving average. But also, and this is also important from a technical perspective, can you see here I've drawn in an uptrend line going back to April, and that uptrend line has now been fallen through on Tuesday because we closed below there and below the 200-day simple moving average. And at the moment, what we're seeing is the current recovery we saw yesterday and today, that previous uptrend line, because it has been broken, now acts as a resistance line. And this quite often happens, and you can use it in your technical analysis to see what might be happening. And basically now this resistance line here acts as resistance. And as long as it does on a daily chart closing basis, we may actually be coming off again and fall through the low we saw this week. Now, if that were to happen, how far could we fall? Well, we can see here that was around $3,073. Then the next support area are these highs going back to middle and late February, and also the June high. And these levels are around 2,880 to 2,836. So that would be our next downside target area in case of this giving way. But if that were to be the case, because we had these big sharp candles to the downside, and are seeing those again, it is quite possible that actually Ether could go back towards $2,600. So watch the recent low from this week. It is important with regards to the charts. And here again, for the bulls to be back in control, what we need to see at the very least, in my opinion, is a rise above the last relative high, which is again the Sunday 2nd of November high at $3,916. Unless that happens, I am being cautious here basically because the momentum has clearly now turned to the downside. We've taken up previous support levels, the uptrend line, and we're trading around the 200-day simple moving average, which may act as support. Don't get me wrong, we may bounce off here again. But as I say, we need to rise above the 2nd November high for the bulls to be more comfortable again. Now, I can also look at other cryptocurrencies, and I was just told by the gallery to look at Solana. And Solana is also interesting. I wrote an article on Solana. You can read that on the IG platform or website. And what happened here was actually textbook technical analysis in that we fell through the uptrend line that we had in place since April. You can see here it was a very clear uptrend line which held several times in the past few weeks. And you've got this triangle formation here. Can you see this triangle there? And then on Monday, we fell through the lower triangle line and through this uptrend line and through the 200-day simple moving average, all of which was negative. And then when we fell through the 10th of October low, it was telling us it was going to go to the next support area. Where was that? Well, basically, you can see here, the first downside target was the 2nd of August low, but we sailed right through there and went to my next lower support area here. You can see basically I've connected up all of these previous lows here going back to July and then also May, and this low here from the 27th of June, and that area was nearly hit before we bounced back. So again, as long as that area holds, we might still be all right. We may see something similar to what we saw in the past when we had sharp sell-offs, sort of a grinding move back up again. But even if that were to happen, you've got resistance between the 10th of October and the 30th of October lows. That's between $170 and $179. And then you've also got the breached uptrend line, which is now a resistance line, the 200-day simply moving average, all of which will act as resistance. And again, from a technical perspective, I want us to see a rise above Monday's high at $189.07 for me to basically believe that perhaps we've bounced off the support area and could be heading higher again. So unless that happens, there is still a danger of us falling through the support area here. If that were to happen, we could very quickly head to the June low here. That was made $126, but possibly we should, in that case, actually head lower towards $120, $115 or so. But you can see we are already in a bear market, because basically from the high in mid-September to this week's low, we had a drop of nearly 42%. At the moment, the drop is about 37%. So clearly more than 20%. So the chart is also looking quite bearish, because if what I thought before might be the case, this was an A, B, C Elliott wave correction, we should have then headed higher again, but we didn't. We just consolidated, and then we fell through this low from the 10th of October. And that basically negates this possibility. This is another ABC correction, which worked in July. You can see we went down A, B, C in Elliott wave terms, and then we made new highs. This hasn't happened here. Instead, we've fallen through the 200-day simply moving average. We've fallen through the uptrend line, now a resistance line, and we had a sharp fall through the October lows. So all of that is actually quite bearish in the short term. Now, if you look at XRP, another question I got on XRP here, you can see that, again, here we've already dropped quite significantly and are trading in bear market territory, down 48% from the high seen in August. And we can see we've seen a series of lower highs and lower lows for quite a while now, and are actually currently testing this previous support area. Can you see here all of these highs between the April 11th high and the 29th of May? Let's actually just draw it on here together. So I'm taking a cluster of previous highs and previous lows, connecting them up, and then trying to find an area with previous highs and lows where we could potentially hold. So I've connected these up here, these, and this high here. And that gives me this support area. And lo and behold, it's exactly where we held this week. So as long as we hold there, we may bounce back. But again, as with the other cryptocurrencies, you need to be careful, because we can see that we are still in a downtrend. We have a series of lower highs and lower lows. And we can also see that if we were to bounce back, I mean, today already we failed, and yesterday at this previous low from the 30th of October, which acted as resistance. But even if we were to overcome it, we've got that low from the 17th of October, which may act as resistance, then the 200-day simply moving average, and this downtrend line here. So a lot of resistance, all these lows here, also resistance, and these lows here from early August as well, and late July. So again, what I need to see here is not just a rise above the 31st of October high, that's the last reaction high, but because we have a slightly higher one on the 24th of October, I would use that as a reference point. And that was at 0.52 here on the 24th of October. So unless we take that high out, the trend is your friend, it's still pointing down. So the odds are that we will at some stage fall through the 4th of November low. And how far could we fall if that were to happen? Well, you can see here, if we take out this support area, well, the next big support area is made up of the April low and the June low. So that would take us down towards 27 or perhaps 25. So that would be the next downside target area if we were to fall through this support area. And you can basically see that we are turning around. You can see we had a very nice up move from June to August, but since then we've actually got a down move here. And it's the same with other cryptocurrencies such as Cardano. You can see here on Cardano, again, holding at support. This is why it's important that you connect old lows and old highs to see whether in the future these might act as a support or resistance area. In this case, what we've done, we've taken the February low, the April low, and the June low, all of which were fallen through briefly on an intraday basis on the 10th of October, but all of which held on a daily chart closing basis on Monday and on Tuesday and Wednesday. So the day before yesterday and yesterday. And as you can see here, we had daily closes above that support area. Now, because of these lows, what we can now do is say, well, we need to incorporate these lows and make this our support area. Why don't I take the 10th of October low? Because it was a spike low, and that is less relevant than a proper low where the market didn't spike like this. So that is more important. So that's our support area here. What we're seeing at the moment is an attempt at a bounce, but it doesn't seem to lead anywhere for the time being. And here what we need to see is a break through this downtrend line from the high on the 7th of October through the 27th of October high. And then we need to rise above that downtrend line and the last relative high. And that was made here on the 2nd of November, like with the other cryptocurrencies. And that was made at 61.86. So unless we take that high out, for me, the trend is still the friend. And in this case, it's still pointing lower. And even if we were to bounce, we've got all these lows here from the 30th of October, 22nd of October, 17th of October, and the high here from the 3rd of July acting as potential resistance together with the downtrend line. So it's looking quite bearish. But it already looked bearish beforehand, because you can see here the June to October uptrend line was broken through very heavily. And we were falling through the last relative low on 25th of September, here on the 10th of October. So on that day, we knew that we were going to get probably a wipeout, or at least a decline in the trend. And that's what we're seeing at the moment. So what happens here if we were to fall below this week's lows on a daily chart closing basis? Well, you can see here, if I zoom out, the downside target would be the September high and the late August high. We have a clear downside target here on the 17th of July, however, because that's quite close here at 45 to the current lows. It's probably going to go lower than that to these areas, but potentially all the way down to this sort of support area, taking us back to basically August to November 2024, around 35 or so. So it could be quite a damaging move. But having said that, if you look at Cardano from its high has already dropped a huge amount. I mean, if you go to the peak here from December 2024, we're currently trading about 59% lower. So is this the start of a crypto bear market? That's the question I get. Well, we are already in the bear market by definition. I mean, Bitcoin, as I said, it dipped into the 20% bear market territory, but it's bouncing back. So I think we had a vote on here earlier on, and 50-50 poll. So just a minor retracement, 55% of you think, and people think it's a bear market, 45% of you. But having said all that, I mean, we are already in the bear market, and you could have basically seen that beforehand. Here, in the case of Cardano, since October, in case of the other cryptocurrencies, also quite early on. Bitcoin was a bit later, but yes, basically be sure to watch this week's lows and the support areas around these lows, because if they were to give way on a daily chart closing basis, and more importantly on a Friday closing basis, this Friday on a weekly chart closing basis, then I'm afraid it wouldn't bode well for the bulls, because in that case, technically speaking at least, the odds are greater for us to continue to decline than for us to see a bullish reversal. Thanks.